right? So as I said, to really identify key levels, it's important that you use the cheat sheet. The cheat sheet is really M's and W's on higher time frames, right? Once you can identify M's and W's on higher time frames, it makes the job easier and simpler for you, right? So this is a W. This entire thing here is a W. We are going for three components of the M and the W. We're going for the top, the bottom, and the middle. The middle I usually refer to as the nose, right? So the top, the bottom, and the middle. Those are the three main components. And therefore, with those three areas, you should identify them either with a horizontal line, a horizontal ray, or a rectangular box. Because more likely, person going to respect these zones, you know, on smaller time frames, bigger time frames as well, right? And once you have these zones identified, all you need to do is whenever price reach these zones is to watch price to see what type of flag it creates, because it's going to create a flag at the zone because it's a major zone, right? So it's either going to create a reversal pattern or a continuation pattern. And the whole idea is to wait and see what price does at these levels. So, this is bottom of the W. This is actually nosy W here. The middle actually came up to here, but this was the start of the W here, right? So we have that. I can see a smaller W within here. So I'm going to take the top. We already have the bottom here already from the previous W, and the middle is relatively close, so we don't need to catch that. Right? We have an M pattern here. So all you're looking for is M's and W's, and use the line chart. The line chart gives you a clear picture in terms of being able to identify these letters, right? So what we have here, we have the bottom of the M, the top of the M, and the nose of the M. Real simple. You can see a W here. We're going to get the bottom of the W, right? We got the top of the W, and the middle of the W is here. I can still take it though. Let's still put it here. Don't mind it a little close. It's fine. We have a big M here. So we're going to go for the top of the M. The bottom of the M is already started from the previous W. The nose of the M is here. We're going to put a line there as well, right? So that M is covered, right? We have another M here, a lopsided M. So we're going to go for the bottom, top, and the middle, right? And that starts, so this W here that you see. So just all you're looking for is M's and W's, M's and W's. That's it, right? Now, change it back to the candlestick chart, then you can see how price basically respects every single zone that we would have just identified, right? So when you come down now, because we don't trade on the daily, when you come down to the 1 hour time frame, right, to see how you could look to enter, you know, these trades or enter EU. As you can see here, EU was in an uptrend from the ending of March, right? EU was forming an ascending channel, but we're not going to go through channels or anything, but we're just looking at what price did every time it reached these individual zones, right? So if you pay close attention, you had a reversal pattern here, which is this W, right? So price reverse, and then what did it do? Flag, right? Came here, flag. Came here, same thing. It's still a flag, right? Don't mind my lines. Right? Came here, flag. Right? Came here, flag. Every time it reaches zones, you get in a continuation flag. Came here, flag. And I believe that this is so important. And it makes it easy as well if you really, really think about it, because when price reaches zone, it's just a matter of you being a bit patient. So when price comes up, let's say price was on its way up here, you don't do anything with the traders yet, because you now know, okay, we are at a major key level or a daily level, 128.02, right, or 12800. And when price came here, all you have to say to yourself is, okay, let me see what price does here now, because it's going to flag, because it's a major zone, right? So when price reach to these individual zone, right? So when they get to these individual zones, it's just a matter of you waiting. You're waiting to see what type of flag price creates. And I believe like that, my friends, once you have key levels down pat and you understand how to identify these key levels, and you know that you just need to be patient when prices get in there to form a flag, the only thing that will stop you from making money really and truly is your discipline and your patience. Patience in waiting for the flag to finish complete. Right? So now if we're looking at, we can see price did a M pattern here. So this is a reversal pattern, right? Because if you look previously down here, we had a W pattern and then price started to do the uptrend. Now we have an M pattern here, right? And we had a huge sell, right? So what would you expect price to do now? Would you just jump into the trade because price broke a key level? You know that price broke the level. But whenever price gets to these levels, they flag. So somebody could unmute and let me know, what would you expect price to do now?
Flag.
Exactly.
Fly.
Right. So some type of flag to form here, right? I don't let hold that there, look. um, that's better. Some type of flag to form here to come back up to this key zone, right? So you get something like this, and then price continuing down. Right? That's all it is. So now it's just a matter of waiting for price to fly. And again, I probably sound repetitive, but it's because that's how simple the system is. If you could identify key levels, the key is identifying key levels. I could come and add all the other little extra pieces on here. I could tell you guys, oh, you know, this is an ascending channel, and make it all um complicated, for especially for beginners, right? Because beginners not gonna know that this is a ascending channel, right? but someone who knows trading might be able to identify that. They might be able to see this. And this is great. If you could identify an ascending channel, lovely. If you could identify an uptrend, perfect. Right? But let's start with the main foundation of trading. The main thing that everybody needs to understand is key zones. It's like the number one thing. It's like building a house. You need the foundation first. Key levels is it. It's definitely key levels. And if you could identify these key levels, and I've given you the cheat sheet, which is just look for M's and W's. You know, people have different ways of identifying or explaining what is support and resistance. Some people will tell you, look for multiple touches, look for reversal zones, you know, and stuff like that. Look for major reversals, different ways people have in terms of telling you how to identify support and resistance. And for me, I just wanted to make trading as simple as possible for the beginner that wants to start trading, the person that probably was trading for a year but still can't get it, the person that's struggling to be profitable, the person that feels like trading is too much information. Like, the whole idea for me is simplicity. So you would often see me giving you things like cheat sheets, right? So I'm gonna remove this so that you could understand the cheat sheet. And the cheat sheet is M's and W's on higher time frames. To get these, 121, 612, 128, 802, 119, 638, 119, 360. All of these key zones that we would have taken from the daily time frame. And from there, when you're looking to enter a trade, it is you versus you. That's really the truth. People think, a lot of people say, it's you versus the market. It's you versus you. Once you have these levels identified, as you versus you. Why? Because you now have to show how patient you are. You now have to show how disciplined you are to be able to wait for these to form at each zone. So let's look at another one. Let's look at GU, right? So change the line chart, daily time frame, we're identifying M's and W's. I'm going to use a horizontal line. I see big W here, so I'm going to go top, bottom, middle. I see another W here, bottom, middle, and my top already pretty much covered there. All right. Right, I see a W here, bottom, top, sorted. Right. I see a W here, right, bottom, top, middle. Middle actually higher than the others, right? Another W here, top, bottom, middle sorted. I got a nice M pattern here. Top, the bottom already started, middle. W pattern here, top, middle, bottom pretty much started. Right? Let me just move this just up here. Cool. Okay. Right? And that's it. Key levels done. Change back to candlestick patterns. You can see how each level was respected, right? Based on the line chart. Come down to 1 hour time frame now. You're looking for entries, and we're gonna see what price does at each zone. Let's look at the uptrend. I'm gonna go to the uptrend here that we had for quite some time. So when price got to oh, sorry, right. When price got to 127,391, price form a reversal pattern. W. And then we started the uptrend. Right now, this one is a little choppy, GU, but we're gonna still follow it. We're still gonna follow it to see, right? So price came up here after completing this, and you had price doing a lot of, as I said, a lot of choppy behavior. At this point in time, you could have decided, you know what, GU is not for you, or you know, are you gonna leave it until you could see a clear flag? You could have, especially recognizing that every time price came to a key level, you were having some sharp impulses, right? And I love that I have this chart here and we're working with this chart, because I want that when you guys are trading, you look for clear things. It must be clear. Don't try to force yourself in a trade. So you see a sharp movement up and it brought this key level, so you getting in. No. If you can't see a clear flag forming, you should leave it out. Because for me, the continuation comes after a decent flag. Right? So you see all of this choppy behavior, you can't really identify a flag as such. I would have left it out then. Right? I would have left it out then. No, you had a huge impulse here. And then you had a huge flag. At the end of the flag, you had a W. Right? Like I said, you decide whether or not you want to trade choppy or you look for another trade. But for you is recognizing what happens at each zone, what price is doing at each zone before you enter. I don't want you guys to get in a habit where you're just entering a trade just because I need to make money today. I haven't traded for the week. No. Right? You need to be able to see clear flag. So I am going to look to see what would have caused me to get into GU at any point in time. Maybe this flag here, right? This is the only clear flag that I am seeing. But after that, check this, choppy behavior, right? So I am looking. You guys remember, I don't know if Delano was here, but you guys remember there was a time all last year I said I am not trading GU? That I haven't traded.
Yes.
Yeah. You guys see now why I said that I wasn't trading GU? Can you see anything clear and concise? Can you see something that tickles your fancy to get in? Maybe Delano sees it. Delano?
I don't see anything.
Yeah, I see
If
some things that
maybe I
tickle
would
my
have seen
fancy.
it choppy.
I just see it choppy, but I can also see the things that tickle my fancy. But I get what you mean though.
Right? You got a lot of gaps.
Mm-hmm.
Right? Every time price reaches a major zone, you having sharp movements. So you're seeing something in here that will cause you to trade, GU?
Yeah, you're saying real head and shoulder patterns are real inverted.
Okay, fair enough. Fair enough.
Yeah.
All right, all right, all right, Master Trader.
It will gotta be though that if my indicators don't give me the confirmation, then I can't take the trade.
This is the only time I see something that really, for a simple beginner, would have told me, yes, we could look to trade this. This, right? That's really
I would have traded the M at the top.
right. This is nice. That's a reversal. But for the buy going
Yeah.
up, right?
Mm.
When it reaches major level, you got a nice flag. Come back up to this major level, nice flag again. So you could see that after, let's look and see when GU was done with its choppiness, because GU wasn't always like this, you know. It used to be a really nice period of trade. So at the beginning of February, we started to get some nice flags, and you could see that GU kind of like settled down from, you know, the spiking and the and all that choppiness and stuff like that, right? I see things that I would trade as an intermediate master trader or whatever you want to call me. But expert on the charts, you know, whatever. But for the simple beginner, which is very, 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 very key for me, I want that you guys start off with looking for clear things and not just getting into a trade just because. Right? All right, so Monique said she saw the M pattern here. So after the M pattern, so we've already noted that when the trade is changing the trend, it creates either W or M, right? Hopefully somebody would have noticed that. So we had an M pattern here, and then after that, what did we have? We had reasons to sell, right? Trade went down, wait for it again. All you're doing is waiting for a nice flag to form. Identifying your flags. Right? Some of you may have seen this as a flag, so don't let me take it out because Delano may have seen it. There you go. Even here as well. This is also one. There. You have one here too, right? So for me, after the 4th of February, GU settled down and started to give you, you know, areas for entry. Prior to that, unless you're a master trader, you could identify other patterns, as I said, as a beginner or someone who's looking for simplicity to trade, right? You're not going to get the best setup every day. And the reality situation is, you know, experts on the chart or master traders, whoever you want to call them, they don't trade every day. They wait for their setup. There's a specific setup that they're interested in. They wait for that, and then they get into that trade. You would find that person's who master the charts as such, right, would trade like 3 setups a week, 4 setups a week, because it's a specific flag, pattern, or area of interest that they have. And I for me, that is very important. Very important. Right? That is very important. Cool. So let's look at one more. Let's look at an exotic. Okay. Same thing, right? All right, cool. So we're not gonna go too far. We could probably start from around here. All right. Key levels: W, bottom, middle, top. Right. Then you have a bigger W here. Top, middle, and bottom already started. Right. You had another W, but it's also started as well. You had another one here. This is the top. All right. So in there, it's pretty much started. You had an M pattern. So top, this around here. Middle. You had a lopsided W here. So middle. There. And that's pretty much it there. Started. Right. And just identify as many as you can. You might not see them all, right? But make sure that you at least have the major ones, and it doesn't take long. Literally, it doesn't take long. 2 minutes. Okay. So let's look at MXN from here. So after all of this, actually, let me come from here and then come up so that we could get hit that W. Thank you. Right, impulse. Price reached a major zone. You had a small flag. Continuation. That another zone. You had another flag. Continuation. Right? Price then did all of this. And there are flags within this, huh? So here you had a flag, continuation, and so on, all the way down. Right? You could have probably hold price till you get to this zone. Then you had a lot of W's, so price went into consolidation. Everybody should probably be able to see it. So price basically wrapped around the level 1989.807, right? Multiple W's. You have one here, you have one in here, you have a huge one here, split up to there, one here, many, right? So usually at the bottom of a downtrend, the reversal pattern that I see often is a W. Okay, so after the W is formed, what are you looking for? How do you know not to trade this consolidation, right? Compared to maybe here. How do you know when price is going to break out of your consolidation? There are things that you can look for. Flags. A nice clear one though. So what you want to see is you can still get a price within this consolidation, but you know, obviously you would have to manage the trade to know when to get out, right? Setting your take profits based on zones that you would have seen price reversing, right? So for example, this is a flag. So you had an impulse flag and then you could have caught that trade, right? Here again, impulse flag, trade went up. So you could have still traded consolidation here. You had the same thing here again. Nice impulse, flag, trade went up. Right? At each level, at this specific level, right? At this specific level. So sorry, not at each level, but even so, at each level, you want to see this. You want to see a clear flag. Nice impulse, nice flag. Then you can say, okay, I'm looking for my buy. Right? We had a W pattern here. Price went up. Right? And what you're doing is you're waiting for the flag to form. So if you don't see a flag that you like, don't get into it. Right? So you had an impulse here. Nice flag. Continuation flag here. Buy. Right? Same thing, impulse. Nice flag. Buy. Right? And pattern to show the reversal is coming. Right? And trying to make this as simple as possible. Flag. Continuation. Right? I see a flag here, but I don't want to make this complicated. It's supposed to be beginners market structure. Cool. So let's go. Flag, 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 flag. This was such a sweet downtrend. But as I said, the whole idea is to wait for your flag to form. Right? For those who like to swing trade, it's better you getting into your trade around a key level. So if you could identify a nice flag, so you have an impulse here, let's say for example you looked at this, a nice flag, you can get into it at the key level and you can trade zone to zone because you know the next zone is here. Obviously, you would have to manage your trade in terms of moving stop loss into profit, right? But as I said, for me, I love a nice flag at a key level, and I make note of where my next level is so that I can then say, okay, I can potentially trade from here, 120.62, sorry, 20.62.635. And there's a potential that I can get my trade to come down to this zone, which is 19.940.410. And what increases my confidence in my trade would be when I get in here based off of a flag at this major zone, seeing continuation flags as we come down in between the two zones would increase my confidence. I'm gonna feel real good about my trade. Because every time I come and I look a day later and I see this, it's okay. Bearish flag farming. All right, so we're gonna continue for this. This is your trade management because you still gotta manage your trade, right? Okay. In some more profit. Bearish flag farming again. So we're gonna drop some more. So definitely you know, I am looking at my trade coming down to here. Bearish flag forming again. Okay, we're good to go. And every time I see a bearish flag form, my stop loss going into profit, into more profit, into more profit, and I am following the trade. And I'm confident because I see the flags, prices moving nicely into my direction that I want it to go into. And I'm moving my stop loss into profit, which will now become a stop profit because it's in profit now. It's a risk-free trade, right? I see bearish flags. Okay, great. Bearish flag, sweet. Bearish flag, fantastic. And then we get down to here, take profit hit. And this specific one here would have been an amazing trade, right? An amazing trade because let's say go into here based off of this flag. So let's just say here, you know, this is 742 and 52 pips roughly. That was a good trade. And they held it based on the fact that I could identify bearish flags coming down, right? So if I selling, the only flag I want to see is a bearish flag. If I see a bullish flag forming, or I see an impulse, a bullish impulse and a bullish flag forming, then I know the trade is going against me, and I manage out my trade to suit. But if I selling, I want to see clear bearish flags, and that helps increase your confidence in the trade. So wait for the flags to form, right? So just to sum up tonight.
Question, Karen.
Yes, please.
Hi. So after the flag forms for the entry, am I still looking for the engulfing candle?
That's down to you.
On
But obviously the entries is another class.
oh, okay.
But I'm gonna answer that at the end of this.
Okay.
So basically to sum up this specific class, well, this specific training, because we still have the outlook to go through shortly. Use your cheat sheet, which are your M's and W's on a higher time frame to identify your key zones. Right? There are 3 components you want to mark or outline: the top of the MRDW, the middle of the MRDW, and the bottom of the MRDW. And you are using horizontal lines, horizontal rays, or rectangular boxes to identify these zones. So when you're coming down to your entry time frames, which might vary for some of you, might be the 1 hour, might be the 30-minute, 15-minute, or even the 5-minute. You want to look at getting into your trade based on key levels. What is forming at key levels? So the flag is important for you, right? The flag is important for you. You want to see a nice impulse and a nice flag around the key level, then you can look for your entry. And that is a good trade. If you can't identify a clear impulse and flag, I would suggest you to look for another trade setup. But try not to force setups if you can't see something clear and precise. Right? So that was the structured training for tonight.